All right, there it is. Again, introductions are in play. Ready to start this live stream here. Peace, power, and profit to you all. Officially on Throwback Thursday, because we dubbed yesterday way back Wednesday. Typically went hump day, but here's another one, right? Throwback Thursday. Why? Because we're back at some familiar places. The market is trying to shrug off bad data. Essentially, bad news is good news for the market, even though we're down today, but they're acting like this is good news. Of course, the elephant in the room today is PPI, price producer index, which pretty much measures the strain or the gain that producers, manufacturers, and wholesalers, distributors have to deal with from raw cost of goods and commodities, products, values, manufacturing, whatever, that they have to price to sell that to retailers, right? Or to, those who are going to resell at department stores, et cetera, et cetera. So whatever strain they feel or see is coming down as a direct result of what those commodity prices may be in terms of spot prices, right? So this is a type of reading, if you will, that really tracks, just how much is being, produced or not, right? And so that's in my opinion, it's a massive read on the extent where we're seeing that there's just still not enough supply value out there, right? To really get ahead of this inflationary story as of yet, right? Because everybody want to call the top in inflation. Everybody want to say it's peaking. Everybody want to say it's this or it's that. I get it, but I will say this. If we are going to be a data-dependent society, which we're not, we claim we are, but we're not. Clearly, everybody in the administration, from the top down, they claim they're data-dependent, but they're not. They're very reactionary. They're very, late in most cases to do things. So, yeah, by the value of that you're reactionary, that means that you're late, right? Clearly, right? You're not progressive, you're reactionary. And that's because they don't really want to do a whole lot. Right, because again, it stems their tide, right? It pulls back their, honey pot, so to speak, right? They're invested in the markets too. They're doing things to initiate policy that gives them windfalls, and they win from it. Technically, the American people are just at the behest of everything that the top down is doing or will not do, right? In this case, in terms of really getting ahead of this inflationary story. Again, big readout today, as you guys see on the screen here, 11.3 producer price index number came in hot today, bigger than expected, which we got yesterday with the CPI that came in exorbitantly higher than they expected. All this idea that inflation was peaking going back in the month of May to be exact, May, that came out in the June readout was just a whole lot of hogwash, right? Of course, a lot of us knew this. We were already on top of it. We was not confused or perplexed about what was happening. The only people that got caught off guard were those wishful thinkers, right? Those people who completely refused to accept fundamental analysis as a key market value for their investment cycle or their investment thesis or their trading thesis, right? They just refused to accept the reality that buy the dip is not necessarily the name of the game going forward. Not on everything, right? Not on everything. Right. So a hard head makes a soft behind, as my mom once said, right? A hard head makes a soft behind. In this case, a hard head makes a soft wallet, right? When they keep taking those L's, at some point they'll get comfortable and say, okay, this is enough, right? Let me buckle down and really pay attention to the data, right? Let me be a little bit more prudent in understanding there's a dynamic here, a fundamentals, technicals, and a price action sentiment that I now need to put in the forefront, right? So we go through these things and we see it, for what it is. We're trying to be, good characters of judgment here when it comes to being able to read this stuff properly. Of course, you cannot time the exact bottom. You cannot time the exact top, but we can, stay within the confines of what the information is kind of giving us, right? From there, at least, we can say that, okay, at least we're on the side of the data, right? We're playing into strength or we're playing into weakness according to what the information is telling us. Now, markets will typically do 100% totally opposite of what sometimes the data may present. We get that, right? What happened yesterday Clearly, right? Market just, shrugged off a hotter than usual CPI print. They actually tried to get ahead of the CPI print and lost, right? Wall Street, initially got the number and then pumped the market at 385. And then, it was better than we expect. Okay. And then they dumped the market. What does that tell you, right? These people are really they're gambling. They're literally gambling at Wall Street. Everything that they tell you not to do, they're doing it up there at Wall Street. So yeah, we're in a Looney Tune type of marketplace at this point. We're seeing it for what it is. We know these people are desperate. They're greedy. They can't refuse, they refuse to take reality as a form of responsibility in terms of being fiduciary responsible for the words they put out there over the airways and how they're really managing their clients' money. But they'll have you to believe that, they know it all, right? But they've been vehemently wrong since last year. They've just been adamantly wrong since last year. They went from transitory to, is maybe not so transitory to, okay, well, we're not going to have, bad lingering inflation. Okay, well, inflation is starting to be entrenched. Okay, well, recession definitely won't be in the works. Okay, well, we might have a mild recession. Like, these people can't make up their mind how they want to present their lies. And at this point, you got to call it what it is. They're lies, because at some point, you got to either eat crow, put a foot in your mouth, or just shut up altogether. It's obvious that they just refuse to shut up. A la Jim Cramer, been trying to call the bottom since March. Couldn't make this stuff up. Literally since April, he's been trying to call the bottom, been failing ever since. Yet he still has a TV deal, right? He still, gets a TV deal to keep misleading investors. And they just keep buying whenever, when he say buy. Well, the slow ones do, no disrespect. But yeah, you got to be kind of off your rocker to be following Jim Cramer at this point, right? With the track record he produced between him and Kathy Woods. Again, they are the darling misfits of the market for 2022. They are the misfits of 2022, right? Jim Cramer, Kathy Woods, they get that award hands down. It is what it is, right? But nonetheless, we're here, right? We are the shade tree mechanic type investors. We are the money crats, right? We are the people who are, avidly trying to grow this craft respectfully to the ideal of the data and the education behind it, right? We will, we will take no prisoners when it comes to realizing how important education is in this stuff. If you want longevity, you got to go that route, right? There's no shortcuts to success. You can get lucky, but you won't be consistent. I repeat, you can get lucky, but you will not be consistent. So consistency comes at a point where you put due diligence and discipline into work. When those things come together, 9 times out of 10, profit should follow. Success should follow. Some kind of form of a gain, advantageous moment should follow, right? So those things are important to us. And we want to make sure every time we come, before the people over these airwaves, whether we got 100 people watching or 6, 7 people, whoever, it's always going to be the same story. You're never going to hear us switch up, right? We're not going to switch up from that, right? We're not going to give you pump signals. We're not going to throw tickers all around just recklessly. We're not going to give you that, right? We're going to give you, hard-nosed, hard-knuckle type of information based upon what's out there on the primary side of things, be it technicals or even fundamentals, right? The rest is on you at that point, right? You got to take it the distance from there. So PPI, again, 11.3% year over year for the month of June, came in hotter than expected, flaming hot, right? And there we go. Again, excluding food, energy, and trade. Again, the biggest things that people have to deal with every single day is food costs, energy costs, and values of trade. That's a problem in itself, because that hurts a lot of you corporations. The currency rate pairs are now all out of flux because the USD dollar keeps ripping. We've lost parity with the euro. When I say we, meaning the nation of America, right? They've always tried to keep the euro somewhat close to itself as a welfare case, and it finally lost its control and it's dumping. So they've lost parity with the euro. It's down 96, 95, somewhere around there, some crazy number below the dollar. It is what it is. So yeah, a lot of things are going, to hell in the handbasket, and yet you still got people out there saying, hey, everything is still okay. The economy is strong, even though we literally are technically in a recession, which I called literally 2 months ago. Got a lot of flack from it too, and that's fine. I just followed the data. It is what it is. They're going to either have to cook the books and prove me wrong, or they're gonna have to cook the books and prove me wrong, right? We're in a recession. Europe been in a recession. It's no, it's not no mistaking that Europe has been in a recession. But again, you know how that stuff goes, until they make it official that they're what, kicking their citizens in the teeth by bad policies, then it ain't, it's not official. But yet you feel it at the grocery store, the gas pump, utility energy bills, you feel it, housing costs, you feel it, rent prices, you feel it, everything else you feel it, but you can't, you dare not say the R word, right? Oh, bad R word. You dare not say recession. But guess what? Over here, recession, right? Right? We're going to keep saying it. And that's just, again, one of many things that we have to deal with, guys. What's going on, family? Tricky Willie in the building. We see you in the house. What's going on, fam? Jermaine Sumlin in the house. Peace, power, and profit to you as well. Right? Shout out to you, man. Shout out to you. I hope you guys having a great day, right? A great day, right? So this is the reality that we have to face and what we're dealing with here. Again, we're just trying to get through, being able to understand what's happening in around the market, help one another to be cognizant of that, conscious of that, so we can then again be in a position where we can protect ourselves, right? It's the village mentality, right? Hence when we say Ubuntu, I am because we are. It truly is that kind of energy, right? And we want to make sure we speak truth to power when it comes to that, because again, the worst thing you could do is mislead people already in a very ambiguous, irrational marketplace at this point. Is just refuse to accept the reality that things are getting ready to slow down. Doesn't that necessarily mean there's not money to be made? It just means that things are slowing down based upon us being over accommodative with our stimulus, if you will, debacle, right? The greatest American heist in American history came on the back of the Fed printing all that excess of money, didn't necessarily need to for that length of time. And now we're reaping the consequences of it, not the benefits, but the consequences. Now it's the benefit for those who are short the market, a la this guy, right? I've been definitely net short since 477, right? Got the puts to prove it. Of course, I closed a lot of those way back then, but I got short the market for the pullback around 477. All right, off and on, just been hitting it, right, and moving it, bringing it down, right. The same way the market went up in 2021, like it had no, no restraints. Well, it's coming down on a stair-step fashion, and actually, it's crazy because if you look at the market for what it is. Let's get to the charts real quick here. Let's get straight to it because I don't have a long time today, but let's get straight to the charts. If you look at the charts, guys, realistically, we've been getting that stair-step to the downside, somewhat of a soft landing, if you will, right? Now, it's debatable to extent. Some people may feel it a little bit harder than others because they were overly leveraged, right? Well, that comes from being being, a little too optimistic in terms of not wanting to accept the reality of the data, right? So you look at the charts here, just kind of looking at this, just go back to the monthly here. We talked about this a little bit yesterday. We're literally right back to where we started from 2021. Right, we've given back literally all the gains of 2021 in this latest, 6 month worth of dumping. Right, we're literally at the 6 month scenario or 7 month, whatever. Right, we just say, cause we're backward, in terms of the data. So we'll just say for 6 months, we've given back all the gains of 2021. And short order time frame, it took the entire year to get the gains we got in 2021. We've given it all back in 6 months. Well, someone say, man, that's just a little too much too fast. Well, okay. Well, we went literally from 218 off the COVID lows all the way up to what? Nearly 500 in under 2 years. And so now that we've pulled back, let's say maybe a little over a third of that, all of a sudden, it's just too much. Well, hey, again, we got a gift. We got a gift that a lot of people were not ready for, and they missed the big rally during that time. And now, since they were trying to play catch up well until 2021 and starting to put big size on, now they got flushed on. So how tragic that is. The markets are brutal. Markets are very brutal, right? They take no prisoners. If you late to the dance, then guess what? You just miss getting a chance to to dance with the best woman in the party that night, whatever, right? Or best dude if you're a woman, right? But nonetheless, again, it doesn't necessarily mean that you can't make money, right? We have to be conscious of the idea that there's two ways you could trade the market, right? Well, it's three really, but it's up or down, right? For the most part, right? Now, if you refuse to say put on hedges, if you will, essentially what you're doing, you're hedging your risk value that you're getting with some of these loan plays are, that's been gutted, then, you just got to sit there and weather that storm. I don't know how to, say it no other way, because people are, kind of still a little, tepid about wanting to short the market. Like, why? Like, the majority of the billionaires that today, well, for the good part, a lot of them that's on the investment side, they made their biggest gains shorting the market, taking out the bad actors, right? You're doing your civic duty by shorting a lot of fraud. And some people still like, man, I just can't bring myself to short the market. I just can't buy puts. I can't short. I just can't do it, brother. All I can say is, again, just good luck, right? Good luck. Hope things work out for you. As you kind of watch it, try to dollar cost average into a lot of your positions. Whatever it works, just hopefully it works for you in the long run. Now, again, on a 3-year, 5-year, 10-year window, some of these awesome stocks that we know that are great, great growth companies, or great proofs of in this case, I would say proof of stake values, they'll do well, right? They'll do pretty well, right? But as of now, again, it's just carnage time. It's carnage time. It's time to kind of, take out, the bad actors, pull a bullet in the back, whatever, come back and say, well, who's next, right? Hopefully that'll scare everybody else to get their stuff straight, right? Because, again, a lot of that has to get flushed out the market, right? Just for, lack of better terminology there in that regard, that phrase value, but y'all get it. We have to flush out a lot of these bad actors. When that happens, it's risk on, right? So you should be happy. As weird as that sounds for a lot of people who are kind of late till the last rally, you should be happy the market's pulling back here. It's kind of cleaning out, again, all that fluff, all the stimmy check money, people who wouldn't necessarily have, had a long thesis. A lot of that, euphoric money that was just, the Fed could do no wrong. They thought Jerome Powell was Jesus, right? Walking on what? On the printer, right? Walking on printers exposed to water, right? They would just really head over heels inside of a very false premise type of economy, and also that of a marketplace. It is what it is. Again, sink or swim is the narrative here. Every man, woman, and child has to sink or swim. That's the reality, especially living in this country, right? You have to be able to maintain, right? There's nobody really going to come throw you a lifeline, right? Indiscriminately, we may get moments like that, but it's not a consensus that people just go out their way. Why? Because everybody's trying to chase their their so-called, next bag or whatever. But we're here now. So the market's, again, just kind of signaling to us, hey, it's time to take a little break, right? Again, look where we were overbought. We were literally overbought from the month, literally come make this stuff up. From the month of April, somewhere around April, right? June, April sometime, all the way, May, I would say May of 2021, literally all the way, you couldn't make this stuff up. You see here, to around about February of 2022. We were overbought on the RSI on the monthly from May of 2021 all the way to February of 2022. Somebody make that make sense. You see there's a gray area right here? That means we're overbought. We're over 70 on the monthly, overbought. And someone, or some people dare, to accept that this is normal or that was normal. Just constant pumping. And it was weird too, because I only got this going out towards 2018. Let's go back a little further. Let's go back to 2008 if we can, right? When it really got ugly, right? Now, there's only certain periods of time where we hit that level of euphoric value, right? And we just overbought for a long time. The last time we had such a euphoric moment was back in 2017, right? We went from 2017 overbought on the monthly all the way literally to October 2018 overbought on the monthly. Before that, we had a little small break around 2013, right? June, basically 2013, all the way to literally December of 2014, market was overbought on the monthly. Now, interesting, going far back to 2008, we've never seen that since then. Now, what was different after the 2008 subprime lending crash came in the value of unlimited QE, right? Ben Bernanke under Obama, many other people, they just took literally our tax dollars or the ideal of us paying back this, excessive debt that was going on in the national debt, and they just started unleashing a wave of what? Fiat fake currency into the marketplace. M1 money supply, M2 money supply went through the roof. Printing. I mean, printing since been printing, right? Just printing money. And no one said, hey, okay, enough is enough, guys. So they went on a campaign from 2008, 2009, all the way literally to 2022, or as in this case, 2022, March, around 2022, is when they officially stopped quantitative easing. Moment of silence for all that fugazi foolery. So you're telling me roughly over the 13 plus years of just unlimited money printing, where we saw the lights where entire year and a half stretches where the market was just overbought on the monthly, just like we've never seen nothing like this ever before. Over here, same thing, never seen nothing like this before. Just recent one, never seen nothing like that before. And every time, I got to show y'all this, every time that has happened, when we left that overbought scenario, we trended back down to some kind of form of what? Medium or line of what? A deviation area, if you want to call it that, right? At around this area right here. See how area we came down? You can barely see it with all them volume bars there. But we bounced at around that midpoint there, that deviation point, that mean line. And then we kind of, consolidate, and then we bounced and went through another cycle. See right here? Last cycle we had, same thing. Bounced around that medium line. We trended, and then we went on and went higher. This time we actually broke through it, which we'll blow it here very slightly, as you can see there, very slightly here. We broke through it. And now, with the fact that within that 13-year stretch of this bull market that we just came out of, and I'm saying we out of it now because we're in the bear market. It is official. This time we're up against a heck of a lot more economic headwinds. We just came out of a pandemic. We're still in one, but the extent of the brevity of it is now kind of somewhat understood. Economic slowdown, supply chain issues, the theater that's happening right now in Russia with Ukraine, the idea of the recession. I mean, you can go on. Currency parities is starting to happen now. I mean, we can go on for days, right? There's enough bad news to pass around to everybody. Everybody can get a piece of chicken, right? You get a bag, she get a bag, he get a bag. We all get bags. It's that kind of reality here in the stock market. So now that we broke below this medium line or this deviation point here, that says something. Here again, we bounced around here. This section, sector here, we bounced around. This time we've actually broke through it. And there's thoughts that again, eventually we can end down around about 350, 330 area. Some people still pushing back against that. I'm like, well, how again, give me your bull case. Give me your bull thesis. I want to hear your greatest bull thesis. Right? Because they tried that literally all throughout this. They tried it here, right? They tried it here, right? And they definitely tried it here, right? And which we're right at around that area now. But they've been trying to call the bottom, for now, 4 or 5 months? And they just been wrong. So I just don't know how people are going to be able to ration out in their head that they're wasting good money on bad trades. Or in this case, they're too early on some of their dollar cost averaging. They're really trying to get ahead of the Feds. And the Fed's like, dude, I done told y'all we got to kill demand in the marketplace. We're going to start quantitative tightening at the tune of around now I think it's like 45 billion. They're going to up it around August, September, whatever. Right? That's a joke in itself, but we'll leave that alone. But just more of the same, right? Them trying to kick the can down the road. They're afraid to do what they know they need to do, and they just playing this game of musical chairs with investors. Really dog whistling and signaling and virtue signaling to Wall Street more so than Main Street. They don't look. Y'all know what it is at this point. I mean, if y'all really think these people care about Main Street, look, I got a bridge to sell to you in Brooklyn right now. I got a title to it right now in my back pocket. Let's go, right? Right. I take Bitcoin as well. I take it. That's at around these levels here. I take Bitcoin. But no, seriously, this is the reality here. So if you're not comfortable in realizing, exactly what's going on here, guys, it can get a little brutal for you, right? It can be very detrimental to your health and well-being, your financial health and well-being, just to continue to try to chase something that's evident that is trying to do something opposite than what you want it to do. As the saying goes, you got 3 may pop tires on your car, like they may pop at any moment, and then you go out there and buy 1 good tire, as if that's gonna, really make a difference. Maybe 2 that'd have been great, but you're just gonna buy 1. No, you just gonna, save up and get you enough where you can get at least 2 tires, right? The market is literally on 3 may pops at any moment. At any moment, right? The market just flush down, go and tap that 350 here. In my opinion, I said, you know what? They should have done it. They had a chance to do it, back during around May. They should have let it happen then. They should have went in and got that cathartic flush, right? Going to get it over with, capitulate. Let's get on it out the way. Let's flush it down, right? Right. Let's kill our demand instantly, right? But no, they want to play the game of, we can have it, have our cake and eat it too. The ignorancy of Wall Street has no bound. I mean, just a constant, clown show every day. Constant. And yet some people are comfortable, playing this game, right? They want to play this game inside their head. Man, shout out to those who get in the bag today. Oh man, my Novavax puts print. Why should I sold one and kept one, and should hindsight 2020, right? Should have kept both, right? But gotta lock in some profit. And Novavax taking on the chin today, right? Big time. Right? But anyway, this is the reality here, guys. I'm saying we have to be conscious of what's going on here, right? So be it tech sector, be it whatever, yeah, you want things cheaper. Let it get cheaper. Let it get cheaper. Right? Don't be so giddy, right? Don't be so, cavalier, just jump out the window. Again, as you see up here in my top right-hand corner here, right? Think about it, guys. You got to be smart. You got to be smart, right? You got to be smart. You've been buying at the top and you just been getting run over, and you still trying to buy. You got to be smart. You got to think. You got to critical think, a lot more these days, right? You're playing chess, not checkers. The market is already 4D chess move bulls already. Up from the top all the way to where we are now, and they still keep trying to convince the market that the Feds is wrong. They got it all wrong. They shouldn't be raising rates at this point. All this goofy stuff. The market already 4D chess move bulls way back here, and now this is just the aftermath. This is the carnage that's coming down, and they just keep trying to add. They keep trying to add. They keep trying to add, and they keep getting run over. Like you couldn't make this stuff up. Like I want to add the long position like everybody does, but I am not going to do it. Again, I tell everybody emphatically, the only position I've added to thus far this year was my AMD when it got down to low 70s. That's the only thing I've been adding to long term. That's it. I'm not touching none of that other stuff. I'm not touching Tesla, Apple, Microsoft, none of that stuff. I'm not touching none of that stuff. Enphase, none of that stuff. Plug, all that stuff just getting drugged right now. Not going to do it. Right? It just makes no sense to try to force the market. And again, we're working with on a little bit of money, right? If Wall Street taking it across the head and the chin right now, what make you think your little dollar is going to change the trajectory of the market? I'm just asking for a friend. You just got to be on some serious, some serious, I'm about that life energy right now because it's not healthy. It's not healthy for you mentally. The agony that you just wasted good money on bad trade. And it's definitely not good for you financially. Especially going into tightening cycles. Not just from the Feds, but the economy. Everybody's pulling back. Globally, it's still in shambles. And everybody still want to play the game of, yeah, maybe, but but this time it's different, bro. We've been buying the dip successfully, but this time it's different, bro. We good. Okay, jump on out the window then. Have at it. Right? Have at it. Right, what's going on, family? Tricky. Who's that? I already said that. My brother, everything in the building. Shout out to him as well. Shout out to anybody that might be listening on Facebook or Twitter. We appreciate your viewership, right? Your patronage to the channel. Like, share, subscribe, right? Be a part of the Money Crats, right? Be a part of this movement of, again, people who are thinkers in this game, right? We're thinkers in this game. We're not reactionary, right? Shout out to you all today again on this Throwback Thursday. We appreciate you. We truly do. Right. So again, we're at a point now where we just have to start realizing this is the extent of the marketplace you have to deal with. Now, again, at some point we're going to get a reprieve. We get that. The reality here is that, of course, you just want to be ready, right? As the saying goes, stay ready so you don't have to worry about getting ready. That comes on the back end of you doing what? Putting money away, either you're in cash, right? Either you got out of margin much as possible, because people in the margins got man, the margin accounts has been getting ripped. Now they've been getting some of the smaller reprieves in between, but they just been getting ripped, and people still sitting in all that that leverage, and like why? Right? You see this big outflow happening, and people still want to try to convince the market that the market is wrong. Like how? Like where they do that at? Right? But again, some people got to learn the hard way. Unfortunately, that's unfortunate, right? Because maybe they've been getting bad data from someone else, or who, I don't know what's going on, but it ain't good, right? I mean, let's look at this here. Like this kind of stuff is happening in the marketplace. Now, this it happens more than most people probably think sometimes, especially with the rate of how industries and things change up. But this stock dump. Now, as a matter of fact, let me back it up a little bit. It was trending. Of course, it had dumped, came all the way down to $35 and change on what? The idea that the vaccine scenario, or the ideal of the jab, right, was starting to be what? A nothing burger, even though we know we're still dealing with those things. But here it is, Novavax is the company that came late to the party, right? They had been struggling to get their serum FDA approved. It had won some kind of level of acceptance in India, I think in other country, I think Europe, but it did not get, that American approval. Now, at the rate that we know, when Pfizer and basically Moderna, and even that little bit of Johnson Johnson had really cleaned the clock on all the money that the government was putting out at that time. Even that a lot of the nations that needed to kind of get those, vials in their nations, they're pretty much already ahead of everybody else in that game. They got everybody that they thought they can get, and a little extra. If you was late to the party and getting your stuff out, convince me how you're gonna survive now, trying to say that, we just got an FDA approval literally yesterday, but we still think there's value out there in the marketplace of to get, to sell our our jab serum at this point. Like, are you kidding me? Are you kidding me? I mean, you just look at this here. Like you couldn't make this stuff up, right? Could not make this stuff up, right? You coming into the new year, right? You coming into the new year again behind the 8 ball, talking about you finna make some money. Like where? Right? You had your heyday. Now, mind you, we traded a lot of Novavax into this big old upswing here. We traded Novavax all the way up into this big old upswing here. A lot of us did. A lot of people even had this in their long-term portfolio. And then we chopped out. This is the time when they were just trying to get awareness. They're trying to get their little asset in the face of a lot of people, and get it also approved at some point, like same way Moderna and all them was doing. So they got a benefit of the doubt. Look what the stock came. The stock came from literally $7 to $8 before COVID. $6. It was like $6 before COVID. $4 before COVID, and went all the way to 300. By 2021, literally by the second month in February of 2021, the stock was up to $300 a share. Like, what else do you want? Right? What else do you want? Well, you got to be a special kind of greedy, right? To convince yourself a stock that goes from $4 to 300, in literally a short order time frame, literally under a year, and then you convince yourself that if you still following the data that they got again a miracle so-called help me for the for the virus, then okay, yeah, a lot of that stuff already been priced in. Literally 10, 12 years worth of margin value already been priced in. And they had not sold out one vial. They had not sold out one vial. Because at this point, the government was just financing everything. And now here we go. You're on the way back down. You're on your way back down now. Man, shout out to people that have been short this thing since 300 that bought leaps. All right. If you bought leap puts from 2021 into 2022, oof, what are you eating right now? Even when you had these little small pullbacks and all that kind of foolishness here, if you held your ground, you oof. Good luck. I mean, well, congratulations. Not good luck, but congratulations, right? So this is the market you got to deal with. Some of these players are just late. They're late to the party. They're late to the party. right? So, I'm saying that because, again, I cleaned my clock there a little bit on Novavax, right? I got short this thing literally at around this, it was like 72.89 area, right? 72.89 area during the intraday here. And I'm already up, over 10 points on this drop so far. Intraday. Rarely do you get a chance to get those kind of intraday put buys. Because typically Wall Street's so nasty, market makers get the biggest flush during the pre-market, so you can't buy puts or calls, and then you kind of get caught up in the chop when the intraday opens up, right? This time it was a gift. And I was fortunate. I got two of them filled. Now I was contemplating on wanting to do more. I was like, nah, I want to put no more than maybe 600 in this, right? I ended up putting in a little over 4. But I was telling myself, you know what? Yeah, this ain't gonna bode well, because we talked about this slightly a little bit yesterday, with our last live stream. They're kind of late to the party. They're late to the party with this FDA. This is a classic buy the rumor, sell the news. Well, what do I mean by that? Look right here. Right? These last couple of days, they bought that rumor off this 9-day moving average here breach. They pumped it off 63, ran it up towards 72 or whatever, and it pulled back. Now, before that, they had bought the bottom off this 35 area, right? In value, in terms of hoping that news would turn out to be good. I mean, the FDA approved. They knew about this way back then, right? Middle of June, even before that, around May, June, they was trying to get the FDA approval before that. But it began to be somewhat clear to them that they may get a chance to win this FDA approval. So the bulls showed up. They bought this thing off the low. I mean, that was a great trade. You got to give them credit. They bought this thing off 35, off this low here, ran it all the way back up to like 75. Nice trade here. But if you think about it from a long-term game, like, man, okay, man, that was a good time for people to get out that was already trapped way up here. Right? They're like, well, we're not going to get it back to the promised land possible. I don't know. Maybe we're not. I don't know. But that was a time for them guys to get out. And what you're seeing right now is just that. It's like, you know what? It's just not going to happen. And so you have this, stop loss rate. You have this, capitulation, panic selling. That's what you got there. Stock down over 21, 22% on the day. Party's over, unfortunately for them. But I got me some money off of it. I sold one of them again. I know I think this is a little too premature. I'm kicking myself now, but I still got one of them on right now. I still got one of them still, working right now, if you will, right? But again, that's just the nature of the marketplace, right? No prisoners, right? As they say, no prisoners, right? It's a lot going on, guys. Again, I'm just, cherry picking to a degree, but this is things that are these are top trending assets of the day. Again, this Novavax is trending all over everybody. Discord, Twitter, stock tweets everywhere. It's just trending everywhere. Like, man, Novavax is getting crushed today, right? While everybody's still focusing on PPI and all the other stuff, right? The market's just all over the place. Essentially, it's all over the place, right? No one wants to take an L, right? I don't want to take this L. They don't want to take this L. They're gonna have to take this L, right? Because the market's just not, they're not doing what they considerably want, to. I guess when I say it this way, I think they'll know that they're comfortable, that they flushed out a lot of that foolishness at a point where we have less media attention surrounding a lot of these major data points. Because now we still at peak news media coverage at this point, right? That messes these algos up more than you can imagine, right? Because they're feeding off certain buzzwords. Essentially, that's what they're doing. They're just feeding off buzzwords. They're just all over the place. Hence what happened yesterday. As soon as the CPI data dropped, the market just squeezed up. Like, what idiot had their hand on the buy button at one of these big hedge funds or banks at that point and cut the algos on at the same time, and then the market just instantly plummeted? Like idiots. So giddy, so greedy, so want to be ahead of the Feds, and they just keep getting their head knocked off. And then when they lose really bad, they try to revenge trade, try to buy the dips, cause the market kind of spread back up and all this dumb stuff. Just mess up the price action. Just greedy. Right? There's the only way you can put it. Right? They hate taking L's, and they hate being, it's like they don't want to accept the reality that the markets are not what it used to be. And so that's why we keep, stressing that this is the ABC kind of marketplace. Always be closing your positions. Don't get caught. Don't get caught, guys. These guys, they just too desperate. They're too desperate. They're messing up the tape. They're messing up the price action. They're messing up the trends. It's just not worth it. It's not worth it. right? A lot, still has to come into fruition here before we can even begin to say that this is the kind of marketplace that's, duly ready to kind of get that level of price action coming back into it. It's just not ready. And someone say that cake ain't ready yet. That cake ain't ready yet. Start going in the oven every 2 seconds, right? Get out the kitchen, right? It's not ready yet. And here it is, Netflix got earnings next week. Good luck. Good luck, Netflix. Just good luck, right? Just couldn't make this stuff up, Couldn't make this stuff up. RIP to everybody that was buying Netflix over what? 400, 350, 400, all the way up to 500, 600, up near 700. Good RIP, guys. RIP. Sorry. All right, and I've been shorting it all the way down. Oof, I made a killing on that one. That dropped from what, five down, and then I hit it again right here. I hit that thing twice on this drop. True story, right? Them puts, oof. And they got earnings next week. That's the only reason why I'm bringing them up, because I said, yesterday I got Netflix on my radar and what? Facebook. Definitely them two. Definitely Netflix and Netflix and Meta's on my radar for their earnings. Now I know it can go either way. I just been doing a little research like I always do. I got between today and tomorrow to decide how I'm gonna put my position on, because I'm definitely gonna put my position on for Netflix either this evening or Friday. Now, again, I may end up hedging it, doing a put in a call, given the situation at this point. Even though they got a little news the other day about them partnering up with Microsoft, right, to help them with their ad revenue scenario. Look, that's a little too late. Like, they're doing it at that value does not account for what already has happened. Up until them having to release their earnings tomorrow. Them numbers already in the books. The only thing that news can do for Netflix is to add a value of guidance to their conference call. So you know what? Since we got this deal with Microsoft, we now starting to plan for this amount of value of what ad revenue to now come into the books, maybe going in by what next earnings cycle. That may bode well for what bulls to get excited. They looking for anything to get this thing off its previous lows. At the point where we're at now, Netflix is literally, matter of fact, it's below where we were back in at this point here in 2018. Right? It broke that 198. We haven't been this low on Netflix going back to 2017, essentially. I think 2017. And we did a show on this a while back. So 2017, the last time Netflix was at around these points here, as you can see here clearly. Now, what's weird, because you see right here, you see this little floor right here down here, the 139, 140 area. That's where a lot of people started to think that Netflix may be heading next. Now, I'm not saying that's where it's going. This is not investment advice. We only give opinions over here. This is straight edutainment, right? Education, entertainment, all in the one. I'm just saying they're going to be watching that here, and we're going to be able to look at that a little bit here when I go to the futures market, or in this case, the options market, and show you what that looks like. Outside of that, we also got back up towards 200. Why? Because there's a natural little purse point, right, at around that chop zone around 200. Now, does it have the energy to make those kind of moves again after those kind of big drops like that? Those big drops like that, do it have 30 points in either direction still baked into it? Who knows? Possibility. Because some would say that Netflix at this point is still overpriced. You went from the king of the hill, literally the king of the hill, to now at the bottom of the meal, right? You're at the bottom of the meal now. You started from the bottom, it was started from the top, now we're here. That's that remix. Started from the top, now we're here, right? The remix. So 30 points in either direction. Could happen, right? Again, either way, you got to think about it, right? You got to be smart, right? Come through Tiffany Haddish, right? And all the rest. You got to be smart, right? So real quick. So let's do this real quick, right? Since we're on the topic, right? Again, y'all know we cut the charts on. We go to work. We talk, but we also go to work, right? Let's go over here real quick, right? Let's take these things. Let's take to the bar chart real quick. Let's just see. All right, I'm just sharing this one on the house, right? This one here on the house, right? So this one here on the house, now, y'all know I don't mind, man. This is what we do over here. Stop playing, we for the fan, right? We for the village. Look at this here. Let's look at this real quick here, right? Shout out to everybody coming in still. Peace, power, and profit, everybody. What's going on? Overroll in the building, right? Got my blood in the building. Shout out to you, man. Shout out to you. You're right. You got a bird in the hand, right, and then one in the bush. That's what I'm talking about. Exactly what I got. That Novavax printing, boy. That thing up around about what 600%. Well, about 400 something percent right now. Right, last time I checked, it was up around about 400%. All right, give or take. Let me see. Yeah, I know it's probably somewhere around there. Yeah, 500%. It's up 500% right now. As of right this second, it's up 500%. All right, so shout out to that joker. What cooking right now. It's still cooking too. So we'll keep eating off of it while it's cooking. Right. But yeah, let's get over here real quick. So let's look at Netflix like a couple seconds here. Right. Let's look at this real quick. Peace, power, profit, always Zane. Happy to have you in the building, man. Good. Shout out to you, man. Hope everything's been well with you. Shout out to over Zane Montego in the building. Shout out to you, right? Right. Shout out to you, fam. Right. So let's look at this real quick here, guys. Just real quick. Yeah, y'all know we bought that data over here, right? We bought that data. Right? We got the data. Right? We got that data. So again, for what it's worth, we know they got earnings next week. Now, this is the early preliminary put to call ratio. I'm just going to do this early, right? This is the early preliminary put to call ratio. Look at the puts, look at the calls. They're almost simultaneously even, right? They're almost even to a degree, slightly. We know this is offer, some overage here. But again, the place of interest that we're talking about is just based upon what the chart is showing us, right? The chart is showing us that, again, if they're going to get a 20 plus point move, 30 plus point move in any direction, let's see if the Wall Street is thinking the same thing. So as of now, like we're talking about, maybe the $200, that $200 strike price. $200 strike price on the calls, right? Let me blow this up a little bit so y'all can really see it. Some of y'all might be on them cell phones, right? So that way you at least have, you can pinch in and zoom on that thing. See right here? Just to show y'all I'm making this stuff up now. See right here, that level right there? That's $200 strike call buys for next week. Right now, they cost you around about what? About $4.15, $4.20. They've already lost 95 cents on the day. So these put the position here were already like $500 coming into to this morning. Now that the market and pull back and get kind of dumped on the day, they what 95 cents cheaper on them calls. As of now, 182 people then bought positions for that $200 strike price for next week. 8,000 on the open interest. Notice that you don't see anything close to that bigger. You don't see any other number bigger on the open interest for that strike price. Go figure. Go figure. Not a coincidence, right? As they say, not a coincidence, right? Clearly, you see what's going on there, right? So someone is feeling very, froggy. They may jump out the window. What's going on, family? Angie Ma, right? Angie Mon in the building, right? That's Miss Angie Monroe, right? That's her other page I can sell, right? I know that's Miss Angie Monroe, right? Let me go on and get that, add that count, and then I'm gonna add you as well, Ro, right? For the fam, right? So y'all see what's going on there, right? So someone is feeling froggy about Netflix at the $200 strike price. They wouldn't have paid that $4 and change, right? At this point, it's 95 cents cheaper, right? It's cheaper. It's cheaper to keep her. It's cheaper to keep her. Look, at this point, they wouldn't have put on risk on for that. Now, let's go down and look at the puts. Let's go look at that 140 put, right? That 140 put, right? You see clearly right here already, right? Not as much as the call openings on the call side, but look what's happening in terms of the intraday action here. Now, notice that these right here for that same $30 window plus, they're almost like literally what $200 cheaper than that of their their bell curve partner stood up there at 200, which is still 30 point moving in the direction. Of course, you look at this from a strangle perspective, right? Or a straddle, in this case, if you want to do a 30 point window within a certain window point value, it's $200 cheaper. And then again, of course, it's up on the day, up 20% on those puts. 141 contracts in so far. 624 sitting on the open interest. Now let's go a little, let's go close to the end of the money. Let's see where they really stacking up at. Right? Clearly they stacking up at, on the open interest around that 160. Right? That 160 put, man, we $13 off from that right now. As of today, we're 13 points off that strike price as of now. Those contracts are already printed. Right? 90 contracts came into that. 292 sitting at the 150s. That's the same price here that you would pay for that of the 200 strike price for the call buys for next week. These were here at the same value. Well, not the same value in terms of the point spread, but you get a 20-point, or in this case, a 10-point cushion if you buy the 150s. Somebody putting on risk there. Again, this is just all, conversation. It's not a buy or sell recommendation. I'm just kind of showing you the mindset of, what's going on with some of these traders here, where they put their money where they mouth at, so to speak. 292 contracts came in today. 1,144 on the open interest. Interesting. The 150 strike starting to get a lot of love. And then the 160s, of course, open interest sitting on those very nicely. Like people who bought those things, like, when the market was sitting up there around, in this case, when Netflix was sitting up there around about 180, 190, and then 200, they probably started putting these positions on way back then. The positions up right now, up nicely right now. And they're just holding it, riding it, probably into earnings. Who knows? Maybe they'll take a little profit. Maybe they leave 1 or 2 contracts on, right, and just let them ride. Just in case, Netflix does drop into earnings. But again, a lot going on here in terms of confidence, in terms of how the market's going to feel about this earnings cycle. We spoke about this stuff emphatically about how Wall Street, even though they think they're ready for this earnings cycle, they're not. They really aren't ready for this. Like everybody was like, okay, this is the moment where the banks gotta do their thing, right? We've been raising rates incrementally. The banks gotta rip now. Nope, it's still too early for the banks. Because the Fed refused to go ahead and raise rates at the level that they know they're supposed to. The banks can't really key in on making money off some of that interest quite yet. It's just too soon. And that's why they failed. JP Morgan missed on earnings, bombed. Morgan Stanley missed on earnings, bombed. We got Goldman Sachs, Bank of America, all this stuff coming up, right? Yeah, you may get lucky with Goldman Sachs because they're more investment centric, right? As opposed to loans and all that stuff that deals with, the stuff that Goldman Sachs, Morgan Stanley, all that stuff deal with. Even though JP Morgan kind of more on that side too, but Wells Fargo definitely more property centric. So they're going to be tied to a lot of housing interest values when it comes to that stuff, loans. So yeah, but you can kind of know, go through the banks and know which ones are more centered towards investment values or they're more on the loan, traditional bank side, right? And you kind of draw your line in the sand based upon interest rates and yields, what they may look like in terms of their profit, profit share revenue. All of them going to still be a little weak. That Goldman Sachs guidance, it said everything, right? It said everything that you need to know about this scenario. Right? They're in trouble, right? They are literally in trouble at a time when they're raising interest rates, the Feds, and they can't even really profit off of it the way they really want to. Not yet, I should say, not yet. Right? Too soon, right? As they say, too soon. So just something to keep in mind. Again, outside of that, guys, y'all already know, man, end of next week, then the following week after that, it's going to be fireworks, man. It's going to be 4th of July all over again. And I can't wait. Again, like I said before, I got Facebook on my radar. Facebook and Netflix definitely on my radar. I got others too, but them two right there, y'all already know, right? I beat them up. I beat both of those up last time, right? I beat Netflix up the last 2 times, right? I got Facebook last time and looking to possibly get them again this time. Not saying they're going to pull back. I'm not saying they're going to go up or not. I'm just saying I got my eye on them, right? I got my eye on you, Al Qaeda. I got my eye on you, right? Matter of fact, let's run over there and look at the chart real quick, just on GP, real quick, a small chart, right? Going through this stuff really quickly here, seamlessly as I can. Again, I can't be on it super long today. All right, let's go. Yeah, where's my, where we at? Okay, hold up. Let me do this here. My mistake. Yeah, shout out to everybody again coming in. Peace, power, profit to you all. Hope y'all having a wonderful day, right? Hope you guys are having a great, trading experience today, that you're making good decisions, right? Getting after this market the way that, that you're able to making good decisions, right? So let's look at Meta real quick here. All right, let's flip over here to Meta. Meta. Right. All right. So same reality here, right? Again, let's back the chart out. Let's go to 30,000 feet. We like to go to 30,000 feet, back this thing up, right? Back it up, right? So we can see what's going on here, right? Right? We should be good. Yeah, we good. All right. So same reality. It looks like Netflix almost, doesn't it? Right? That chart look just like Netflix, bro. Yeah, maybe. And maybe it's for good reasons why it looks like this. That part. We know Meta, Facebook, has a lot of problems. They tried to gloss over them much as they could, as long as they could. Wall Street kept giving them a pass. Oh, but it's but it's Facebook, bro. This is why it's Facebook, man. Facebook is cheap right here, man, at 300, man. What are you talking about? Man, Facebook is cheap here at 250, 220, man. What you talking about, man? It's cheap here, bro. No, man, you got to be kidding me, man. Facebook is really cheap at 200, bro. You got to buy it at 200. I'm like, really? And they just been buying, and now they down here at 150. Moment of silence for all that good cash going, just out there. It's not a loss until you sell. Granted, it's not a loss till you sell, but you really put on a lot of what, I don't know, this weird risk at a time when the market was pulling back. You just thought you were just going to save the market or save Facebook at that point. Couldn't make this stuff up. Now, what's interesting about Facebook going into earnings, now this area down here starts to look very interesting. 145, 146, 135, 136, right? Even down probably, some people say 125. Now, yeah, that's stretching, but anything can happen. But I'm more keen towards this 140 area, right? On the downside, and back to the upside, which is clear here, back towards that equilibrium of the that VWAP there at around about 170 up towards at least 175. Why is my window tighter for Facebook than it is for Netflix? Why? Because Facebook as a whole, even though we know that the problems that they have for ad revenue now being light because people pulling a lot of their revenue, posts on Facebook for a lot of other reasons because of inflation and all the other stuff. Many of the issues that they have with the metaverse, that they were just too soon. They pumped money into the metaverse too soon, and it's not materializing. I mean, we can go on and on and on. Lawsuits, all kind of goofy stuff. They dealing with a lot. So you got to play this one a little bit more fine. Why? Because those dumps in Facebook, right? You got this big one here, right? This one here was just a wake-up call. Netflix had like two of those, right? So Netflix was used to it. Facebook was not. Because there's still value in Facebook, believe it or not. To what extent, that's to be debatable. Because right now, I think Facebook has a PE of around about 12, 11, 13, somewhere around it. It came down substantially off this latest drop. Again, keep in mind, started from the top, now we're here. Right? Remix. They've gave up a lot of that PE, price to equity ratio. It has come down substantially. Netflix did too, but Facebook's a little different. Because they actually had a more consistent revenue stream than they can say that of probably even Netflix. But I say this, I digress. I say all that to say this. They're looking for a reason to buy tech, meaning Wall Street. Facebook happened to be a major intricate part of that tech overlay. For them, they can't fathom it coming down to 125, although we know it can. Because to them, they've already eight bricks here. They 8 bricks right here. They 8 bricks right here. Net 200, right? And they've been eating bricks down towards 180, 170, all the way down to where we're at right now. They just can't keep eating bricks in Facebook. At some point, all that money has to kind of try, attempt to slow up the inevitable fall of Facebook. Now, it still has to deal with recession. It still has to deal with rate hikes that are going up that makes cheap money, a hindrance to overpriced market cap tech companies, to be exact. It still has to deal with those things. But Wall Street says I still like the value that that Facebook provides than that of a Netflix or some of the other players, because they got all those users, right? 1 billion plus users on Facebook, right? It's crazy when you think about it, right? And Mark trying to figure out every single day how you can monetize that or monopolize off that, so to speak. That's why he went out and bought Instagram and what's the other one? WeChat, whatever thing called, that little WhatsApp, whatever it's called. It's making those kind of moves, right? When I bought Oculus, right, to kind of go along with this metaverse stuff. He trying to make moves, but he trying to, I don't know, he want to be a glorified video game creator at some point, maybe. I don't know. That's what he seemed to be trying to do. Rebrand the company because you've already made whatever, right? All that selling people data stuff, they ratchet, right? Facebook is like super ratchet. I hate Facebook. Right? Strong words, right? I get it. But we can go down the list in terms of how ratchet they are, right? From banning people, suspending people accounts for no reason, letting other stuff fly. They just ratchet, right? It's ratchet. But here we go. So 135, 136 areas are very what? They're on the map. 140, definitely, right? I like 140, right? So 140 back up towards and then up towards, again, that area we'll talk about, back towards 175, 180, we'll play back toward that. So 180 to the upside, down towards 140, 135 to the downside. So let's go check some of those out in terms of the open interest here on the on bar chart, right? Just kind of, we're just looking at this stuff, right? We're not making any recommendations, none whatsoever. We're just saying, hey guys, these are areas of interest, right? And we know Wall Street will be looking at these same areas, right? So whether you do a strangle, right? You may do a condor or butterfly, whatever you may do. If you choose to trade into those, right? You just want to make sure you have all your bases covered, right? Because we know that the market get real crazy and squirrel like very quickly, right? Make no mistake about it, right? These people looking for a reason to buy this market up. They keep trying. Well, look at today, right? Look what happened yesterday, right? They couldn't make this stuff up, man. These people savages, right? But they savages with a couple of dollars in their pocket, right? Straight savages. So let's look at Meta real quick. We got what? We said 175, 180 to the upside, and then the same 140, 135 to the downside. So let's look at those strike prices for next week. Well, no, they got earnings not next week. Facebook got earnings the following week. So I think it's in the week where they start where they're going to release the GDP numbers, right? So the 27th. So Meta's on the 27th, right? It's on the 27th, right? So let's go over here real quick and put in the right dates for that, right? So that'll take us out to this expiration of the 29th, right? So here we go. So right out the back again, let's look at the open interest here. Open interest on the put to call ratio is kind of skewed towards the call side, which makes sense, right? They think the bottom's in. That's why I was saying all that. Now you see why. They're very skewed towards what? Wall Street, look at this and says, you know what? It should have a bottom at around about 150, right? 150 some change, right? At this point, since it's been kind of bouncing in around that area. 35,000 on the open interest on the call side. 2,000 contracts came in thus far today. 25,000 on the put, 1,000 on the what? On the put side came in today. Now let's check those levels. Let's check the puts first. So that 135, 140 area, right? 135, 140 area. See right here? Those contracts actually up 97 cents on the day. So they started out around about $300 at the beginning of today. They're already up 97 cents on the day in profit, obviously, right? Market pulling back. So shout out to those people who already bought those contracts and making money on it already. 186 contracts came in today. $8.99 on the open interest. Look at the 145s. 1,000 of those sitting right there at that $5 level. $1.44 already in the money. Banking, right? They're making bank, right? The 135s, 53 contracts came in around $8.50 on the open interest, almost simultaneously even to that of the 140s. Go figure, right? Those contracts up 70 cents on the day. They started at around about $200. Now they're up, going into the next 2 weeks. If they tend to hold those contracts, they'll be up. Interesting. Look at the 130s. That's why I said get around that 130, 130, 150 area. 125, excuse me. 2,000 sitting on the open end, 2,000, 600 to be exact. Sitting on the open interest at 130. Those contracts up 46 cents right now. They were around about $1.50 coming into this morning. 2,600 sitting on the open end. Somebody really hoping this thing go down to what? To 130. Potentially can happen. Who knows? But these are areas of interest, right? We just talked about this. These are just areas of interest. Given, the nature of the market at this point, anything can happen. Right? Anything can happen. Right? Because we understand what's going on as far as interest rates. We're going on, we know what's going on as far as, the tech sector as a whole and these individual scenarios within the company. We know these things are still major problems for these companies. Right? They just can't run away from them. They just can't, hide their head in the sand and say, well, this is okay. It's not. Right? It's just not. So let's go up here to the call side. So we said 175, right? 170 and 175 up towards 180 on the call side. So let's go there. So instantly, the 170s right here, 2,000 on the open interest. Go figure. 74 contracts came in today. They are down $2.75 on the day. These contracts open up around $7 and change. They're $8 and change. They're down to $5.62 right now. Yikes. Right? The 175, same right there. 133 of them came in today. 7,000 600 sitting on the open interest. People who held them things from yesterday, they're down $2.28 today. So basically, this was up around about what 680, what 680, $6.08 today. They're down to $4.22 as of right now. Yikes. The 180s, right? The 180s, right? Look right here. 3,283 on the open interest, held from yesterday. 138 of them came in today. They're down $1.89 on the day. Yikes. These contracts are up towards near what? Close to about 480, 490 coming into today. They're down to 305 as of right now. Right? So interesting when you look at this here, right? Even from, the idea of doing a strangle or not, right? Excuse me. Right? Doing a strangle or not, you see those areas now and what they present, in terms of the probability of that happening based upon people putting their money where their mouth at. These open interests are showing you that these people putting their money where their mouth at. They're putting their positions in saying literally a week, near 2 weeks in advance. Why? Because they already seen the market kind of perching up here around this point. Since we lost that 390 the other day with the CPI coming out and all the areas, stuff like that coming out, people saying, no, I'm not going to wait around. Let me get this stuff cheap now and let me just sit on it. Right? Let the market shake me out this trade. That's all they're doing. They're being strategic. Again, you got to be smart. You got to be smart. Right? It's not always a good thing to try to buy 0 days to expiration or 3 days to expiration or a week. If you can afford it, of course, get your little time on it. You just got to get your thesis, in alignment with the trend of the market is kind of presenting. Because even at that point, you say, oh, yes, further out the money you may have to buy if your money ain't stretching that long, but you still got time. That means your theta, won't be such a big headache for you over time, right? You'll still have a little delta intrinsic value in that contract. If you buy a premium outright, that is. Make sense? So again, no secret to that point, but you got to get in the habit of looking at this thing from a lot of different levels and windows. And I did that the last 2 times I shorted Netflix in the earning. I bought those things at least in a week in advance. Well over a week in advance. Right? Got them cheaper, got a chance to get it at certain purchase points before the market start kind of going through its cycle of degrading value and coming to the downside. Paid off great. Earnings came around. I was able to buy more than one on a lot of those contracts. So that way it's great. So if I'm making money into the earning play and it's doing good, I could take some of that risk off, pocket it, and leave 1 or 2 of them on for the earnings. Let the history unfold from there. Right. So just some things I'm looking at. Again, just not recommendations. I'm just saying, hey, it's gonna be on and popping. The same can be said for Apple. We know what's going on with Apple too. Apple is not spared, right? By no intents of purpose, Apple definitely ain't spared. Got them on the radar too, because we know the iPhone sales are basically in the dirt right now. Right? iPhone sales in the dirt. Not even up for debate. Right? Strictly in the dirt right now. Wall Street says, well, but see, they got this, they got that. With that M1 chip, straight failure. It flopped so far. They got to go back to the drawing board with it. They don't even have enough, material to even kind of manufacture the way they need to. And the manufacturer's all jacked up. So as of now, it's a flop for now. Not that the tech ain't, solid in some value, but it still got some problems here and there. So yeah, they can't even sell those little chips right now. Right? So a lot of things going on even with Apple, but we know Apple is the darling stock of the market, right? That's the bellwether of the stock market, right? Ever since definitely, Boeing fell from grace, they've been hinging a lot of their money on Apple. Go figure, right? So yeah, Apple definitely on the radar too. Just haven't been speaking about a whole lot, but you get what you get with Apple. We know that. We know everybody in their mama going to try to buy Apple, right? Like they feel like that's the only safest play that's out there. It comes with the territory, right? It comes with the territory. No secret there, right? So again, it's just a part of just understanding how this stuff was, is unfolding. Yeah, Baba got hit today as well. You're right, Miss Angie. Baba got hit today, right? And that stock just been all over the place too, right? Oh man, Baba just been all over the place, right? One moment, it's up because the Chinese, government, doing this or that, and then this they ain't okay. Well, then they're back, threats of potential lockdown, all this stuff just all over the place. As you see it down about 5.5% here on the day, about 6 points on the day. all over the place, right? So that's obviously it was up around about what 109, 110. So anybody that had those in the money puts coming into today at around about 110, those guys eating today. Look at it, up 400%. Right, no, excuse me, that's the 101. Sorry. Well, I'm sorry, wrong one. When we at? Here we go. Well, that was the ones who bought yesterday. So guess what? Even if you bought the 101s from yesterday, those ones are really eating, right? Because they got this thing down. This thing's up 400% right now on those, right? 97 cents on that. But even the 110s in the money up nicely, 173%, up $4 and change. Of course, those are bigger gains the closer you are in the money, right? Those contracts are up $4.82 on the day. So roughly, they're up an additional $500 on today per contract. Right, they're up $5 on the day. So look at the open interest on that, though. Man, somebody knew something, possibly, right? Like all the people, loaded up on those that 110 strike put. Somebody knew something, maybe. I don't know. People we like to say that, but they print right now. Look at the 100s. They printing. They up 72 cents, up 378%. These contracts started out this morning around about what? 27 cents a piece. And now they up what? 72 cents, 378%. Look at the money that came in on those today. Yikes, eating. But Joker's like, man, how y'all be finding? Look, you got to get out there and search, man. You got to stay on top of that. As you saw, Sister Angela posted the news on Bob. Of course, it was out this morning. I saw it too. I didn't get a chance to trade it. It's just eating. The same way we looked at Novavax, right? Novavax, same thing. Right? Novavax right now just getting, look at the price on it. We're down to 50 now. Yeah, I'm like, man, if I just held that other one, held both of them and not just one. I'm still eating off the one, though. I mean, I'm still eating. But, man, whew. Yeah, right. If for the fifth, we'll all be drunk. Right now, that trade up, what, $900, $920 in profit. So that would have been, I banked at around about, what, 400 something on the first one. I took that bag. No, it was like three. I sold the other one around about 370-ish area, 375 in profit, right? So at that point, I left $600 on the table. All right, whatever. It happens. I ain't crying over it. Spill milk, don't matter here. I'm getting the bag, right? That's just that trade. I also had swing puts and fast and all. They printed more today. It rallied later, but no matter. I already made that bag. I swung SPY puts into today. They definitely printed, right? Shout out to them puts printing. So overall, just a crazy, powerful day here in terms of gains. I'm just, cleaning up, up and down the ranks here today, right? That's what we do for. That's what we train for, right? No secret there. But yeah, just Novavax here is just really giving up the ghost. They're down there 30% almost here. I mean, well beyond short sale restriction at this point, well beyond it. And it's going down exactly what we like, the way I kind of gave you to understand why it's going down. It's going back to that area potentially where it came from, right? Back down towards the 40s and 30s. It definitely can go there. Not saying it's going to go there by tomorrow, but the way that it's dumping like this, you got that kind of level of outflow. Somebody's like, you know what? Yeah, this is done, right? That's big money and retail getting tripped, on the way out the door. They're tripping over each other on the way out the door. Could make this stuff up. Now you can get a hard balance and bounce tomorrow a little bit, but it won't be at the level of a 37%. Heck, probably not even 10%, right? This is them being punished, right? Can't call it no other way. Wall Street, like, no, we're not about that. We're not finna even. No, here to the no. That's essentially what's happening now with Wall Street looking at Novavax. Like, no, we can't do it. Like, y'all had all this time even to get your ingredients right, and you got bad efficacy dealing with Omicron. Like, how, Sway? How, Sway? How? Right? You supposed to have got this stuff in order, bro. What happened? Right? But again, the market is all over the place. Right? The market is all over the place. Right? So we got to just understand, this is just, as they say, these are the breaks, right? These are the breaks, right? Market is all over the place. Right? It's all over the place. Right? So, we'll see how things unfold here going over the next, I don't know, maybe 16 plus hours, whatever, right? But for the most part, yeah, I may end up swinging this one into tomorrow, maybe. Thinking about it. Now, I just came down and hit like 50, I told myself earlier, I said, we get down to low 50, then yeah, right? Even if we can get that low, and we did. Now, granted, I'm on a live stream. I had a little window to probably take that profit. Maybe I should have. I'm sitting there looking at it too in the corner of my eye, but I'm also trying to, do the bill here. But nonetheless, again, the markets are still, in terms of even with Novak, it's weak, right? I know it's weak. But just watching the SPY here, the SPY starting to rebound just a little bit here. We up towards 375.50 here. They kind of came back, pared back some of the losses from the intraday, lows, that is. And again, what we know to be, the markets are still trying to rate the level of severity in terms of what this looks like. If they're going to get that 100 basis point rate hike for the next Fed meeting or the 75. Now, we heard Waller speak today, one of the Fed governors. Waller spoke today, right? It's a little forum somewhere in Idaho, somewhere, that, for him, it's all but sealed that 75 bips is all on the table for him. And he's also potentially entertaining the 100 basis point hike. Now, we know the Fed fund rates have gone up substantially, percentage value for that 100 rate hike at this point since yesterday. Yesterday, we're sitting at around about 39 percentile. I think today we're up towards like 60 to 70% that 100 basis point rate hike is probably conducive for the next rate hike scenario per Wall Street. Now, this may be a scenario where they're trying to overshoot. So in the event that the Feds, undelivered, it won't be as bad. We was pricing in 100 basis point, but we only got 75. That's bullets. Let's go. That's what Wall Street does. They've been trying to pocket watch the Fed so long now, it's not even funny. And they just keep getting run over. That's what's so funny about it. And it's not even, it's funny because I know it's, the idiots that's supposed to be, that know better. And they kind of tricking a lot of other investor retail that follow them. And yet they keep taking L's. Thinking they know more than the Feds. And I'm like, how? Like, how you just jumped out the window like that? Like, how? Why? But again, you can't tell the people nothing, right? Because again, greed begets greed. They refuse to take, responsibility properly and do what's necessary to, trade their books good. But again, y'all know how this stuff go. They're using other people's money, not their own. If they were using their own money, they would not be as bullish as they are. I guarantee you. That's just the facts, right? It's facts, right? Facts, right? That's just the facts. Right? But nonetheless, you gotta do what you gotta do. Right? We gonna get that. Look, at least from my opinion, I think we're gonna get that 75, if nothing else. It's coming. And that's a big one. That's 2 75s back to back. Even though it's still not enough, but we know, come on, man. These people are such, man, these jokers around here such charlatans and frauds, on the government level. It's like, it's not even up for debate. They know that's not even enough, but they're trying to kick the can down the road. They're trying to kick this can down the road. Them Fed hikes are coming, though. You can't stop them. They're coming. They're coming. Man, look, let's go. Let's go. Let's roll some of that beautiful bean footage. Let's go.
Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it.
Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it.
system with money.
Yes, we did. That's another way to think about it.
It's another way to think about it. We just flood the system with money and just, hey, just, you guys got to deal with it. Deal with it. I mean, say deal with it, right? Right. I mean, again, they couldn't make it in the plane, right? They couldn't make it in the plane. So, I mean, I don't know what else to tell you at that point. If they tell you what they're doing and why they did it, then nothing else to think about at that point. All right, what's going on, family? RBG, God killing the building. Shout out to you as well, right? Shout out to the family coming through today, right? All the to go get us entrepreneurs in the building today. Happy to have y'all in the house, right? Again, they just, they let you know already, we print money, right? As we print money over here, song go, we get money over here, right? The Fed be like, we print money over here. We print money over here. Man, they just been print like it's no tomorrow. Right? They just print like it's no tomorrow. So again, that's why we say, guys, you got to realize now that mandate has been, it's I'm not gonna say it's over, but even though they're doing quantitative tightening right now, there's still moments where they're still having to print money indiscriminately to do certain policy agendas based upon the White House. Again, they just came up with $1.4 billion to send to Ukraine again for the healthcare workers. Where that money gonna come from? Your future tax dollars by way of the Federal Reserve printer. There it is. Another $1.4 billion going to get added back on the balance sheet while they're also doing quantitative easing, taking money off the balance sheet. Are y'all getting this stuff now? Right? Do you understand exactly what they're doing? This is why this is going to be a long, drawn-out process of them continuously kicking the can down the road, the financial can down the road. They refuse to gut this market the way they're supposed to because they don't have to deal with the reality of it. It's only going to hurt Biden because, midterms are coming up. Inflation ain't going nowhere. We got a 9.1 read out, and we know it's really higher than that. We'll play their game, right? We'll play their little game, right? This game right here, right? We know that this number is a lot bigger than what it is, right? Right? We know this number is bigger than what it is. They tell you right here. They exclude food, energy, and trade. Food, energy, and trade. What are some of your biggest expenses within your budget? Food costs, energy costs, electricity and gas. And then the trade stuff come on the back end again. We just talked about the PPI, how that currency pair scenario kicks everybody to because you got to pay higher import prices. Right? It's those hidden taxes that are there. And it just wreaking havoc through the system right now. That's what they are. They're hidden taxes. They're there and it's hitting everybody across the head. If they exclude food, energy, and trade, what do you think that number really would look like? If it's at 11.3 without food, energy, and trade, what do you think it will look like if they add the food taxation, energy, gas, and home, all that stuff, and the trade taxation to that? What would that number be? I'm just asking for a friend. Again, I got a bridge to sell you in Brooklyn. I got the title and the deed in my back pocket right now. Right? Like these people really think y'all that, that ignorant. Right? We're better than this. As they say, we're better than this, right? We know what they're doing, right? We know they're cooking the books. As the meme says, or thumbnail says, remember how inflation is transitory, was fake? Wait until you see the economy is strong. They've been telling y'all ever since the beginning of 2022 that the economy is strong. We at negative GDP. We're at negative GDP. Job losses are going back up. The rate of pay increases are starting to stagnate, not going up. Food costs, energy, utilities, everything on the inflationary side is still lingering. But they're still telling you that the economy is strong. Somebody tell me where am I missing anything? Right? Am I missing anything? the last two sound bites that Jerome Powell been putting out with these little meetings he's been going to, the economy is still strong. Wall Street, the economy is still strong. TV talking head analysts, the economy is still strong. Like, you couldn't make this stuff up. Brother said, I manage a restaurant, right? It's hard to get some products, right? See, that's, man, I had a clip posted yesterday I was going to post too. Considering the restaurants right now. Right? Good point, brother RGB God Killer. He said, I manage a restaurant. It's hard to get certain products. I got friends who manage groceries stores saying wheat will be hard products to get. Definitely. Well, we know the wheat scenario is bad because of what happened in Ukraine, right? Third largest exporter of wheat on the planet, or not the first, really. They say third, but we know it's around about the second or third or first base at this point. We know the wheat problem is just really bad. Really bad. I had a clip that I was going to present yesterday, actually, when I was on live, concerning restaurant costs. Right? Matter of fact, let me see if I can cue that thing up, right? I think that's a good time to bring that up. Good. I'm happy you brought that back to my attention. Let me see if I can find this here. Y'all got to see this stuff. A lot of people like, man, I ain't finna pay them restaurant costs, bro. No, bro, I can't do that, bro. I'm out, right? Like, bro, I mean, you want people to give you the stuff away for free? Right? You want to give away for free? Look right here. I'm going to show y'all this right here. Right? Y'all know your brother be on top of that data, boy. I got that data. Right? I got that data. Right? Let's show y'all this right here. Y'all see this right here? A local restaurant in town posted this today. These are the costs that they have to pay now. Right? Again, you're like, man. It is what it is, guys. I was in the business at one point. I know what it's like. Fryer oil. 12 months ago, $12. 6 months ago, $35. Today, $50. What's the increase on that? That cooking oil is up over 400%. From 12 to 50, that's over 400%. Somebody make that make sense. Bro, I just want some chicken. I just want some fries, some chicken, bro. Now you wonder why a 12-piece 12-piece biscuits and 2 sides at Popeyes or let's say what, Kentucky Fried Chicken, wherever, you wonder why that's going to run you around about what, $40, $30 right now, what, for a bucket of chicken now. What my bucket of chicken meme at? I'm out already taking it. I took it off, but y'all look at it, got that meme queued up right now. There it is right there. You wonder why that bucket of chicken right now gonna cost you around about $40 right there. $40 for a bucket of chicken. Got to be smart. Right? Better go get your own chicken, buy your whole chicken, and go fry it. Matter of fact, go hit up our brother Soul, our brother Ali Dawu El, and get them organic chickens he got, and fry your own chicken, bro. Go ahead and fry your own chicken. Right? 400% increase in oil for frying oil. Chicken wings, right? Cat Williams did a special this recent concerned about the value that chicken wings. There's a shortage of chicken wings, right? Apparently, somebody like, man, what are these chickens that is running around with all these without chicken wings? I know they come with 2 legs, 2 thighs. What happened to the wings? That what Cat Williams was saying. Why we got a shortage of chicken wings? Look, right here, $45 a case 12 months ago. Today, a case of chicken wing costs you $175. $175. Somebody make that make sense. That's over 300%. Up over 300% now. I'm in the wrong business, but I need to be in the chicken wing business. I need to be buying some chicken wings and things. Bruh. Y'all in the wrong business. Y'all hustling backwards, bro. Y'all need to go get in the chicken wing business and frying oil business. Y'all need to go get some of that fried oil, that palm oil. Y'all are out here back and hustling. Bruh. This is the cost, right? Look at that. Even the takeout boxes 12 months ago, $25. Today, $95. 300% plus. They ain't there 400% just for the boxes. I'm like Chris Rock now. I'm gonna get the sucker man. Just pour it in my hand for a quarter, bro. Put it in my hand for a quarter. Put it in my hand for free. Matter of fact, take it straight out the grease and just put it straight in my hand. I get the little burns. I'm okay. I only have to pay for your little takeout boxes, bro. Couldn't make this stuff up, man. Could not make this stuff up. This is why it costs you more for DoorDash now and the takeout delivery. This is why the price of stuff going up. So I'm just asking, guys. I'm just showing y'all. I'm connecting the dots for y'all. Y'all see this stuff. Convince me how inflation is sitting at 9.1 right now. With these kind of level of costs right here that you see on the screen. Convince me how the PPI price producer index is at 11.3 with these kind of numbers right here. This is why they take out food, energy, and trade costs. Because the real number will be what? Really around about 20%. The CPI will really be around about what? 19, 20%. Is they lying to you? Is they just straight lying to you? Is they lying to you or are they just straight lying to you in your face, telling you that inflation is peaking, it ain't that bad? Bruh. The money cracks, right? See, this is why I exist. You exist. We exist. We blow the whistle on the lies, bro. We blow the whistle on the lies, bro. Get out of here with all that, them lies. They just mad they beloved stocks right now getting taken to the woodshed and getting what? Getting beat up. They don't want to do the rate hikes the way they need to kill inflation. They want to act like this stuff is not that bad. They want to say the economy is strong when it's not. And they don't keep lying, keep lying, keep lying, keep lying, keep lying, keep lying. Because they know most people who are just, so bullheaded and want to buy this market, they're going to keep buying, keep buying, keep buying, keep catching falling knives left and right. Catching falling knives left and right. Let's go further. This is the same for all what? Cleaning, paper, and food we use. So everything they have inside the house is up substantially. Cleaning supplies, paper supplies, all the other food costs, milk, cheese, lettuce, all that stuff up. So it says what? If a local restaurant adds a few dollars to your meal, it's not to get rich, it's to continue to stay in business. Joe Biden. That idiot went after the gas station owners. Gas station owners saying that the gas station owners were price gouging on gas. Do gas station owners get to set the price for a barrel of oil? Do they get to set that price for the barrel of oil? The open market do. So how is it Raul's fault? Now, some gas stations have been known to get price gouge. I ain't act like it hasn't happened in history. But in this case, man, everybody getting hit across the head. So is it Raul's fault that the gas prices are up? Or is it Joe Biden's fault? Because he can't broker good gas deals with the Saudis or the Venezuelans. Or the fact that he, boomerang dagging himself trying to go after Russia and sanction them and it coming back and hurting them and Europe. Boomerang dagger to the back of the head. Think they were hurting Putin and it turned around and hurt us more. And giving our money to Ukraine every other day. Your tax dollars. Couldn't make this stuff up. And they said the numbers don't lie, bro. Numbers don't lie. Right? Numbers don't lie. We were born at night, but not last night. Majority of the Wall Street, these irrational, silly behind traders, they were born at night, last night, when night. They'll buy anything. They'll buy anything. They're so headstrong and want to save the market, if you will. I'm like, good luck, bro. Good luck. It's not worth it. So this is why stuff is more expensive. And I definitely know, because especially during the pandemic, we ate out so much. DoorDash was on speed dial in this house. Sadly, so we kept it going after a little bit. Again, we work from home. What do you expect? Right? So it's like, throughout the day, we would be out. If we were out somewhere, you would stop and get lunch somewhere. Now, and just have it delivered to the house. So we got DoorDash on speed. Look, we get some savings in there with the little dash pass, but again, these costs are going up because inflation. That's the worst now. A lot of the restaurants that we eat at, we seen uptick $1.20, $1.30, $2 for certain items. I'm like, whew. Now, so the drivers, it's like, dude, your mileage that you take to get to my house, it hasn't changed, right? Now, the only thing that you having to get to pay more is fuel costs, granted, but don't be expecting you finna get no $10 tips all the time and all that goofy. No, look, bro, I didn't eat my food. I'm already paying a lot for food, but we got to balance the thing out, bro. We got to balance it out, right? You ain't get rich, not look. Everybody got to what? Everybody got to sacrifice here, bro. You're not for me getting them kind of tips, bro. Even though you have to pay a little more gas. Look, look. We got to balance this thing out. It's crazy out here, but that's just the reality of things, guys. So again, when they tell you that it's strong, the economy is strong, and it's this and that, like, bro, get out of here with that. Say the economy is great. Say it's great. Bruh. Tell me that the economy is strong, bro. Come on out there, pump them lies to save your little stock portfolio. Frauds, bro. High level frauds. High level charlatans. High level charlatans. Again, they know people out there willing just to, buy everything that these people are saying. I'm like, bro, get out of here with that. Come to my doorstep with that. Say hello to my little friend. Right? Come to my house with that goofiness. Say hello to my little friend. Get out of here with that foolishness, bro. Not today. Not on my watch. So again, we know what we're dealing with here, guys. Nothing new here. Nothing new. Right? Same old, same old. We used to it. The talking points, the hyperbole coming from the media, them trying to browbeat people to not want to fall in line with their agendas, support stuff that doesn't necessarily what you ain't winning from. Like, where they do that at? They want you to suffer in silence, right? They want you to suffer in silence. Like, where they do that at? I'm just asking for a friend. Dude, get out of here with that goofiness, man. We ain't buying that. Right? At this point in the game, if people still feel confident that, things aren't what they are presenting to be, if you can weather that storm, so be it. The game is that you need to remain solvent longer than all this irrational behavior coming from the feds and these hedge funds, these banks, global market participants, this, that, and the third. If you can remain solvent through all their foolishness, so be it. My hat's off to you, right? My hat is off to you, right? I tip my hat to you. Because from where I sit, again, they're not even come this way trying to lie. I'm like, get out of here, out the gate. Get out of here with that goofiness. So that's why, again, we exist. We're just trying to be a voice of reason. We're trying to make sure people not, overstepping their boundaries. They stand within the confinements of what they can attain for or what they can, again, for the most part, what they can manage, right, in terms of risk mitigation, because that's what we're here for. You're here to learn how to manage your risk better. When those things come into fruition, yeah. Right? Yeah. Right. So we got a bounce going on right now in the SP 500 here. A nice bounce. So we're up now at 377. So the market is ripping. Again, more of the same. They're looking for excuses to buy the market up. The same thing they did yesterday off the PPI, the CPI data. And that's fine. Right? I've been out my spot put, so it don't really matter. But I'm watching. I'm like, okay, they're going to give me another chance to sort this thing possibly here. Is that what they're trying to do? Right? It's ripping now. Look at him. Let me show you on the daily chart. Look here. Look at him. Can't take an L, bro. These jokers cannot take an L. They trying to close this gap. The gap around 377.78. Now, interesting. They're going to probably take it up there and fill that gap at 377.78 right here. Or just say 378, whatever. They'll probably close that gap. Or even may try to maybe take it back to yesterday closing price 378, possibly. But whatever they're ripping on right now is just, they're ripping on fool's gold right now, clearly, right? But again, it's a reason to say, hey, it's not as bad as it could have been, but it's bad. See, this is the talking point that's going on inside your head, right? This is what they're rationing out or wrestling with every day. It's not as bad, but it's actually bad. But it could be worse, right? Everybody can say that. I got a decent amount of money in the bank account, but it could be worse, right? It could be worse. I only got $1 million in the bank account, but I could have, 750,000, right? It could be worse. 750,000, yeah, That still ain't enough. Okay. All right. It's that kind of energy, guys. So it is what it is. Now, this was a good little bounce. Granted, it played off the VWAP pretty well, played off the 20-day moving average really good. And they're just doing the same thing that happened yesterday. Again, the market just ripped in the beginning yesterday. Now it's trying to rip on the back end of the day. Now, interesting, we still got more data coming out. We got numbers coming out tomorrow. We're not in the all clear. That's why they keep trying to fight the market back. They just keep trying to bounce back, right? They're just taking all these blows to the head, and they come out trying to buy, right? Because they're trying to play from a higher place, a purse point. They're trying to play from the lows. I spoke about that yesterday. This is the trick of Wall Street. They always do that. They rather try to play from a higher place than a low place. So they just buying money. They're throwing money out there, just seeing what stick, right? Because they don't want to try to play from the market being at a lower place and the market tanking and going lower. That's all they're doing, guys. That's all they're doing. So let me show you this real quick. This is what's going on tomorrow. This number tomorrow, the numbers tomorrow are just as important as the ones that even came out. They're not even as important as the CPI and the PPI, but we'll let them, play fools, reindeer games, right? Let me show y'all this real quick here, right? They're going to definitely close that gap. Let me show you this real quick here, though. 378 is the area you want to watch on this right here. Let me show y'all this real quick. I'm going to get ready to get out of here. Thank y'all for tuning in again. Like, share, subscribe. We appreciate your view here. We appreciate everything you've done to keep this channel going, right? Shout out to you all. Let me show y'all this right here. So this is what's up on the radar for tomorrow, right? Starting, obviously, in that, after the 12 o'clock period tonight, 12 a.m., right? Of course, you got, other nations, Germany, Europe, whatever, right? Spain, all that stuff, like Germany, all that stuff, all put down the line, or Italy, in this case, Italy there, right? Great Britain, Italy, German, right? France, French, whatever, right? You see what's going on with some of their values. But for us, right here, core retail sales, 3-star event, very important. Very important piece of data right there. That's a 3-star event. That's why I say we're not done yet. We're not done yet, right? This one here says a lot because core retail sales, again, we're talking about consumer spending, right? The appetite for the consumer, right? The value highs translate inside of a Dillard's, Macy's, Nordstrom, whatever, Goldman Sachs, wherever you shop, right? Walmart, whatever. This number here is going to be very interesting too. Because if retailers are still pulling back because they don't need prices are high and they're lingering, how can they make the case that the economy is strong? Because if you're not translating your money back into the system to help corporations make that kind of reciprocal symbiotic relationship kind of go forward to keep money coming in, then how can you say the economy is strong when people starting to close their wallets? So if this number comes in bad, how can you had a bad CPI, you tried to pump the market off that. You had a bad PPI, you tried to pump the market off that. What they're trying now. And the retail sales number is all but certain that it's probably going to be a little light because we've been watching people's spending habits. You just saw what the restaurant costs are doing right now. They're up because they got to pay all the ancillary costs. Make the case how this is going to just be a knockout, drag out. So they're going to tell me that core retail sales is more important than CPI and PPI? Wall Street on it off the rocker, bro. And we got another important one, the Empire State Manufacturing Index. That's an important number. Core retail sales as a whole, of course, I said core, both of them are kind of in that same boat. Retail sales, same thing, 8:30 in the morning. It's coming, right? So, yeah, right? The market's not out to clear yet, right? And we got industrial production numbers tomorrow too, 9:15, coming in hot. Manufacturing production, probably going to come in hot. 10 o'clock, business inventories. And this one right here, Michigan 5-year inflation expectation. This one's going to be really good because this is the Michigan Consumer Index. This is a very important one of late. Everybody been definitely watching that Michigan Consumer Sentiment Index. Very important one. Keep your eye on that. 10 o'clock tomorrow, right? So from 10, basically all the way down to 8:30, 8:30 up to 10, whatever. They're going to have to dodge a lot of data tomorrow. So that's why they try to punt the market now. Get it up off the lows as much as possible, just in case it do tank tomorrow. We're not at 371 as opposed to 376, 377. Oldest tricks of Wall Street try to pull. Nothing new here. Then at look at that. 330, y'all see what it is. Aluminum speculative numbers come out, right? The Baker Hughes total rig numbers, turns of oil scenarios like that. GBP, right? Crude oil inventory, all this stuff coming out right around that, 330 mark. Soybeans, wheat, commodity markets, basically. All these important commodity prices that we've been watching. Because we got big OPEC state tomorrow. Tomorrow's OPEC. We have OPEC tomorrow. That basically means auction exchange expiration date. A lot of assets are coming into the expiration date tomorrow. So that means a lot of stuff going to get flushed out the system. Calls and puts going to get flushed through the system tomorrow. Big OPEC day tomorrow. Go look that up if you're not familiar with OPEC. You might want to look that one up. Not the OPEC, but OPEC. Auction exchange expiration date. It happens, sometime within a certain time frame where a lot of contracts expire on the same date, which causes a lot of volatility in the marketplace. As you saw with those one I was just showing you, wheat, gold, all this stuff, NASDAQ, composites, everything, right? It's more than this here too, but they're just some of the things that are coming up for basically up for their expiration value. So they're going to kind of release some of those numbers. People are going to close some of those contracts based upon open contracts, whatever, right? Based upon some of those readings, right? And that's just some of the stuff, right? That's out there. Commodities, metals, all that stuff, oil, then stocks as well, right? So we got futures contracts, all that stuff, some of that stuff come up somewhat like, kind of like quadruple witching, but a slightly little different. Slightly a little different than quadruple witching. Right. So big day tomorrow as well, right? So no risk, right? No risk for Wall Street, right? One would say, right? There's no risk for Wall Street. Right. So we're, again, something to kind of keep in mind. Right. If you guys, want that, guys should already have it, but let me post it. So if you ever want to track this stuff going forward in the future, just come over to investing.com, go to the calendar or the tool tab and hit calendar, economic calendar, whatever. You'll have exposure to knowing what's going on in around your nation's economy, right? What's going on, Oba Brandon in the building? We're seeing the house. Shout out to Oba Brandon in the building. Peace, power, profit, Oba. Shout out to you today as well. All right, what's going on? What's going on, family? Gallon of cheap milk around about $8. Look at that, guys. Milk expensive. Black eyed peas. Look at that. He said he paid $6 for a side of black eyed peas. $6 for a side of black eyed peas. But I'm finna go crank this garden up in a minute. Let me get right out there on this. Right out here, windowsill and a little ground back. Let me plant me some black eyed peas, some kale. Right? It's bad out there now, but gardeners are winning though. Best they can, at least. Gardeners are winning because seed ain't all that expensive like that. It's probably a little bit more than others, but it ain't more than the finished value of it. By the time it grows, land in somebody warehouse and it gets shipped, you're paying all that cost. But that's it, guys. So I ain't really want to be on too long. Again, I got some things to take care of here. Just want to kind of speak to what we got today. This PPI number here, again, they trying to downplay it. It's Wall Street, man. What do you expect at this point? Right? They greedy, they losing. They can't take L's. They're gonna find a way to tell you that it's not this and it's not that, it's this, it's everything, right? It's an excuse, right? They're looking for excuses. And all they're doing is making the market, that much more interesting. So when we go to make some powerhouse moves, in some of these stocks or assets, they're just gonna give everybody a great opportunity to hit them across the head. That's all they're doing, making it very interesting. Right? They're making this stuff very interesting. Right? So more of the same, right? More of the same in that regard. Right? My Novavax put still printing, right? It's still printing. And it backed off that $50 level, about $1.80 thus far. That's because the market pumping right now, right? But it's still down there, 26%, somewhere around 25%. So definitely gonna be monitoring that one into the close. So again, as the thumb says, remember how inflation is transitory was fake? Wait till you see the economy is strong. You know it's fake. You know it's fake. Numbers don't lie, right? And we didn't even talk about the jobless claims numbers jumped an additional 44,000, last week. 244,000 people filed basically for unemployment last week. People are being laid off. People are quitting and doing both, getting laid off and quitting. Stagflation. Hello. Stagflation. Hello. Definition of stagflation. It's happening, guys. It's happening. Stagflation refers to an economy that is experiencing a simultaneous increase in inflation and stagnation of economic output. Hello, GDP, contracting, negative. In a normal market economy, slow growth prevents inflation. Consumer demand drops enough to keep prices from rising. Facts. As you see in the chart here, GDP goes down, unemployment goes up, demand goes down, inflation still what? Goes up, stagflation. Stagflation is an economic event in which inflation rate is high. It is. Economic growth rate slows. It's happening. And unemployment remains steadily what? High. It's happening. This unfavorable combination is fear and can be a dilemma for what? Government, since most actions designed to lower inflation may raise unemployment levels. They gotta what? Kill jobs in order for to bring what? Inflation down. Ain't that something? We don't make the rules, right? And policies designed to decrease unemployment may worsen the inflation. Is that not what we're experiencing right now, guys, in this country? Even in Europe, everywhere, Asia, everywhere is experiencing the same thing. Couldn't make this stuff up. Couldn't make this stuff up. They're going to tell you that it's not, though. They tell you that the economy is strong. They keep telling y'all that the economy is strong, guys. This definition of stagflation is everything was wrong with this economy and then some, right? And then some. And then some. So I'm gonna leave on that note right there. I'm gonna let that marinate for a moment right there. You're definitely in stagflation right now. You're definitely inside of stagflation right now. No and if buts about it. 100% inside of stagflation right now. 100%. Right? Don't let people lie to you. Don't let this government, pump your head up and get you all dewy-eyed over, Look, don't let it happen. Don't let it happen. Right? Stagflation all day, every day. All right, so just make sure you guys are aware of that. So that's all I got, guys. I got to get out of here again. Got some, errands to run here. I thank you all for tuning in. Like, share, subscribe. Hang out with us, right? Again, where we can add value to your situation, investment value, we're here for that, right? As we speak, Joe Biden is over there in the Middle East and begging for oil from the Saudis. Good luck. They sent them packing the first time, calling them goofball. He back over there again begging. Good luck. Yet you still keep sending our money to Ukraine, sending money, our barrels of oil to Asia. Look, bro. Let me get off here, all right? Because I'm about to have a headache talking about this idiocy that people, all the people who voted for Biden, good luck. That's all I'm going to say. Good luck. Hope y'all winning. All right? I'll leave it at that. All right. Peace, power, profit, y'all. Peace, power, profit.
Energy is fire. Conversation is right. If you stay tonight, baby, I might let you say all of me. Want you here, need your mind in these sheets. Completely intertwining our minds, yeah. Tell your future like a psychic. Baby, you gon' end up right in my bed. Chemistry is science. I could play it cool, but I'd be lying. Read you like a psychic. I'ma tell you something, you gon' like it. Chemistry is science. Better than what you was fantasizing. Different kind of blue. Starry in the daytime. your future like a psychic. Baby, you gon' end up right in my bed. Chemistry is science. I could play it cool, but I'd be lying. Treat you like a psychic. I'ma tell you something you gon' like it. Chemistry is science. Better than what you was fantasizing.
The bar raising, we keep moving it up. Ain't no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. I got faith restored, why you pushing the brakes? I ain't full of myself, boy, I'm full of mistakes. I came from humble and roots, I'm here to stand and deliver. Had no one gassing me up, except the man in the mirror. I used to work on my handles, and now it's handles of liquor. I write these songs in a dark room, the candle will flicker. I stay practicing heavy, for when the game's on the line. It's like over and over, I run the plays in my mind. I'm a psycho, I'm taking my time. Rushing perfection is a dangerous crime. You gotta give it and take it. That's what you do till you make it. I had to roll with the punches and take the hits from the flagrants. I'm saying the bar raising, we keep moving it up. And no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. An off game don't mean I'm losing my touch. And no excuses, I ain't using a crutch. Apologies if I was doing too much, but I always came through in the clutch. I was falling, had me stalling. I was way down, now I'm balling. I done came up, and I called it. I done came in the clutch with the game on the line, I know. I operate from a higher place. Wait, some decisions don't try a race. I'm doing what I can to fuel the flame like a fireplace. To make a bunch of money, buy my mama a fireplace. We make incredible songs to celebrate and get mad lit. Once upon a time in Hollywood, I'm like Brad Pitt. My homies say I live a life, yeah, just a tad bit. Learning how to move in this rap shit. I told them that the bar raising, we keep moving it up. And no surprises here, they knew